Have you ever wondered how some people grow their money over time while others seem to stay stuck financially? You've probably heard people say things like, "I'm investing in stocks," or "I'm trading Forex or crypto." But what do these words actually mean? Are trading and investing the same thing? And which one is better for beginners? In this video, I'll explain trading and investing in the simplest way possible, using real-life examples. By the end, you'll clearly understand the difference and know which one might suit you best. Before we begin, here's something important. This video is for educational purposes only and should not be considered financial advice. Always do your own research before making any financial decisions. Now, let's start with the basics. Both trading and investing are ways to grow your money. However, they work very differently and require different strategies, goals, and levels of patience. Let's imagine you buy a small mango tree. You don't expect it to produce fruit tomorrow. Instead, you water it, protect it, and give it time to grow. After several years, it becomes a healthy tree that produces fruit every season. Investing works in a similar way. When you invest, you put your money into assets such as stocks, exchange-traded funds, bonds, or real estate with the expectation that they will increase in value over many years. For example, if you invest $1,000 in a company that continues to grow, your investment could become worth much more in the future. Some companies even pay dividends, giving investors regular income while they continue to hold their shares. Successful investors usually think long-term. Instead of worrying about daily price changes, they focus on steady growth over many years. In simple words. Now let's talk about trading. Imagine you buy a smartphone during a big sale for $500. A few days later, demand increases, and you sell it for $600. You made a quick profit from the price difference. That's basically how trading works. Instead of holding an investment for years, traders buy and sell financial assets over short periods. These assets can include stocks, forex currency pairs, cryptocurrencies, commodities like gold, and more. Their goal is to profit from price movements. Some traders keep trades open for only a few minutes, while others hold them for several days or weeks. Trading usually requires studying charts, understanding market trends, managing risk, and making quick decisions. In simple words, trading means trying to make profits from short-term price movements. So, what's the biggest difference? Investors are focused on the future. They buy quality assets and hold them for years, allowing their investments to grow through time. Traders focus on today's market movements. They look for opportunities to buy low and sell high over shorter time periods. Here's an easy way to remember it. Investing is like planting a tree and waiting patiently for it to grow. Trading is like buying and selling products in a marketplace to make quicker profits. Neither approach is automatically better. It simply depends on your goals, personality, available time, and willingness to manage risk. If you're completely new to finance, many experts suggest learning the basics of investing first because it encourages patience and long-term thinking. If you enjoy analyzing charts, following market news, and learning technical analysis, trading may also interest you, but remember that it carries higher short-term risk and requires practice and discipline. Whichever path you choose, never invest or trade money you can't afford to lose, and keep learning before risking real money. If you found this video helpful, don't forget to like, subscribe, and turn on notifications so you won't miss future videos about trading, investing, forex, stocks, and personal finance. Thanks for watching, and I'll see you in the next video.